morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, and it's January 6th. Wow, the week's going by pretty quick here. We do got a couple items here on the economic calendar. The first up is the first item for jobs week this week. We got the ADP for the month of December. So, previous month, November, we had 307,000 new jobs that were created in the private payrolls. However, that was reduced a little bit lower to 304,000. Forecast for the month of December is supposed to be 88,000 new jobs. And however, we actually had our first loss in quite some time since like March, 123,000, declined by 123,000. So obviously not very good news there. On the other hand, we got factors for the month of November. We had a revision to the October report, which initially came in at 1%, was revised slightly higher to 1.3%. Forecast was calling for 0.7%. However, it came in at 1%, so a little higher than forecast and right about the same as where we did before. So not bad right there. Let's jump ahead here to the headline news. Stocks are up. We're getting the Georgia runoff, and it's looking like a blue sweep here. So, anyways, it's going to be interesting to see how things play out. With uncertainty, the Georgia runoff was basically creating a lot of uncertainty in the market, so that's why we kind of had this sideways movement for the most part in the month of December. However, we do see looks like it could be very much a blue sweep here. So that means the Democrats will have the control of the presidency, the Senate, as well as the House. Uh, like it or not, that looks like where things are going to go. Let's jump over here and see how the bond market's reacting to it. And they're not reacting to it very well. And the reason being is that basically with a whole democratic process, looks like obviously they're going to get the agendas through. That means raising corporate taxes, which means less jobs out there. It also means that they will be spending a lot more, which means more debt being cured. Uh, and also inflation because they'll be just printing off money. So we're down 31 basis points. We ended up down further even yesterday, down like 27 basis points, which brought us close to the 25-day moving average. Now we're even below that and below the 50-day moving average, going for the 100-day moving average right now here. So we're down 31 basis points, so we will see a worsening in our pricing from what we saw yesterday, even the day before. Here's the 10-year Treasury. First time we jumped above 1% now. We finally jumped since the whole pandemic lockdowns began in March. We are above 1%. So we're up at 1.04 right now in terms of yields. And that is due to a whole Congress of Democrats with the one party system without one kind of balancing it out. Unfortunately, that could lead to, again, inflation, which is enemy to bonds because it takes away its value over time, and also more supply out there, which we don't have the demand to meet that supply on there as well. So, again, so yields are rising as a result of this. So, in any case, again, unfortunately, as I had stated yesterday, this could result in higher rates, and that's where we're heading towards right now. Mortgage rates are higher today as a result of the possible runoffs from Georgia. If you guys are needing any information regarding some mortgages or real estate, please feel free to reach out anytime. I am a loan officer, and again, I work with a national lender, so we can certainly help you in many different scenarios. Please feel free to give us ask any questions. I'll do my best to answer what we can get for you. And if you guys want us to take a look at your purchases or refinances, whether it's getting pre-approved, so you can make offers and finance your properties, to taking a look at what kind of rates you can get with a refinance. We can certainly look at those for you as well. You guys have a great rest of your day. Thanks so much for watching, and we will see you in tomorrow's video. Bye-bye.